Bitcoin is having a midlife crisis. BlackRock's hoarding crypto like a dragon with gold. PayPal's giving NFT transactions the "it's not me, it's you" treatment. And investors are riding the market waves, some with surfboards and others with life jackets. Is it the end of the crypto world as we know it?
It's the end of the world as we know it.
Or just another day on blockchain street? Buckle up, because we're about to find out. Well, look who it is. The brave explorers of the digital world venturing into uncharted waters of Web3 and crypto. I'm your host, Stef, and when I'm not busy fighting off virtual zombies in the world of Undeads, I'm here on your Undeads YouTube channel, sifting through the wreckage of the latest crypto news, where volatility is king, and the only thing more unpredictable than Bitcoin's value is guessing which altcoin will move next. Here at Undeads, where play to earn isn't just a game, but a battle for digital supremacy, we understand the stakes are high, just like in your favorite P2E arena. So for all you blockchain warriors and ledger legends out there, sharpen your digital sword. We're about to carve through this week's crypto news with the precision of a well-aimed headshot in Undeads. Subscribe and stay tuned. And let's find out together why the only thing scarier than our zombies is missing out on the next big crypto wave. Remember, in the cryptoverse, like in Undeads, the best defense is a good strategy. Now let's get to it. But before we start, we need to address the elephant in the room.
Francine.
We're about to witness, or in this case, already witnessed, Bitcoin's halving, an event that's as pivotal as it is cyclical, like the Olympics for cryptocurrency, but with the potential for more dramatic economic fallout. Now, just a quick heads up, our episode is being filmed around halving time, so while we won't have the very latest fallout just yet, you can bet your bottom Bitcoin will be on top of it faster than you can explain what zero knowledge proof is. Why does halving matter? Picture this. Bitcoin decides every 4 years that it's time to tighten the belt, slashing the rewards for mining by half. It's like your paycheck suddenly decided to slim down for summer. This artificial scarcity is Bitcoin's way of playing hard to get, and historically, it's been the flirtation that sends market watchers into a tizzy. So while we won't have the immediate aftermath in today's chat, because even we can't bend the space-time continuum, we're setting the stage for what might be a wild ride in the crypto market. Stay tuned and we'll make sure that you're equipped for the show, not just with popcorn, but with the insights to make sense of whatever may come our way. Now, straight to the news. In the second week of April, Bitcoin's investment products saw a staggering $110 million exit stage left as the investment world hit the panic button amid swirling geopolitical tensions and Bitcoin's own momentum losing steam and value. It's like watching a financial exodus unfold in real time, with investors dumping their digital coins faster than a hot potato. The latest scoop from CoinShares paints a chilly picture for crypto enthusiasts. In a recent reporting period, crypto investments took a $126 million hit, with Bitcoin bearing the brunt of investor jitters. James Butterfield from CoinShares noted a noticeable downturn in the exchange-traded products and funds, with activity plummeting from 40% to a nerve-wracking 31% of total volumes on trusted exchanges. It seems even the crypto faithful are holding their breath. Yet it's not a global retreat. While the US witnessed a massive $145 million withdrawal, there were glimmers of defiance, or perhaps just contrarian bets in Australia, Brazil, and Germany, where investors poured in a few $1,000,000, perhaps betting on a rebound. Amidst the backdrop, Hong Kong just said yes to Bitcoin ETFs. Though the excitement was more of a murmur than a roar, Bloomberg's Eric Balchunas, I hope I said that right, tempered expectations, noting the smaller scale of Hong Kong's market compared to the US. In this financial drama, it's not just the bears growling. The entire market seems to be on a cliffhanger, waiting to see if Bitcoin can script a turnaround or if it's time to cue the sad violin music. The crypto market is proving to be a thriller that keeps on giving. But it's not looking grim for everyone. In the high-stakes world of asset management, BlackRock just hit a record with a colossal $10.5 trillion under management, powered by a strong market, and the star of the show, a new spot Bitcoin exchange traded fund. That's right, cryptocurrency isn't just for techies anymore. It's now padding the pockets of the finance big leagues. This quarter, BlackRock boasted a 36% increase in net income, hitting $1.57 billion worth in revenues, up 11% to $4.7 billion. Analysts might have been optimistic, but BlackRock just blew past their predictions. But it's not all champagne and confetti. Despite these impressive numbers, the firm saw a lukewarm $57 billion in net flows, thanks to investors keeping their wallets close while interest rates remain at a 23-year peak. And the standout performer? BlackRock's Bitcoin ETF, which soared to an $18.7 billion in assets. It seems when it comes to betting on digital currencies, BlackRock plays to win. CEO Larry Fink is also pushing boundaries into private markets and big infrastructure projects, eyeing global trends like decarbonization and digitization. And their tech platform Aladdin is attracting major clients, showing that BlackRock isn't just riding the waves, they're making the waves in the finance world. Even with a slight dip in their stock price, BlackRock remains a titan in the financial sector, proving that even in uncertain times, they know how to find the silver lining, or should we say Bitcoin lining. Now, let's take a breather for a quick and pleasant reminder. There's a bit of a digital treasure hunt happening in the comments of our previous episode. Don't worry, you can find the link in the description below. We won't have you going on an actual treasure hunt. So up for grabs, we've got a shiny NFT asset to flex in the Undeads metaverse, an Undeads merch box, because who doesn't love free swag, and 0.1 Ether for when you need that little extra in your digital wallet. Feeling lucky or just up for a challenge? Here's how you can throw your hat in the ring. Head over to the link in the description and leave us a comment with your X handle so we know who to cheer for. Hit that like button like it's a buzzer on a game show. Subscribe to our channel because there's always more where this came from. Follow the Undead Saga on X through the 2 accounts we've got set up. Links are also in the description because we're helpful like that. And spread the love by sharing this video on X. The winner will be revealed in the end of April, so you still have time. Stay tuned, and may the odds be ever in your digital favor. And back to the news. In a story that might make you reconsider your own tech savvy, Charles O. Parks III, alias CP3O, no relation to the golden robot of Star Wars, C3PO, but possibly just as robotic, has been indicted for allegedly turning cloud computing into his personal cryptocurrency piggy bank. Parks is accused of siphoning off $3.5 million in computing services to mine nearly $1 million in cryptocurrencies. Because why hack when you can Cryptojack? Parks reportedly used his array of corporate alter egos to finagle free computing power from January to August 2021. The indictment alleges that with a magician's sleight of hand, or perhaps just a hacker's knack for email creation, Parks mined Ether, Litecoin, and Monero right under the cloud providers' noses. And just like a bad Vegas magic show, the money disappeared, laundered through various digital and decidedly non-digital avenues into luxury cars and bling. Arrested on April 13th, 2024, and facing charges of wire fraud, money laundering, and engaging in unlawful monetary transactions, Parks was set to make his initial court appearance in Omaha on April 16th. If found guilty, he could face up to 20 years in prison, which is a lot of time to think about whether those cryptocurrencies were even worth it. So we'll keep an eye out on how the story unfolds. But for now, this is yet another cautionary tale for the tech world. Just because you can mine it doesn't mean it's yours to mine. In what might be the most significant plot twist since Spotify raised its prices, PayPal has quietly announced that come May 20th, they're rolling back buyer and seller protections for NFT transactions. So if you're thinking about investing your hard-earned cash into a digital masterpiece or a virtual collectible, be warned. PayPal is stepping back like a chaperone at a high school dance. And for the NFT high rollers moving art worth over $10,000, well, it seems PayPal's no longer your backstop against the internet's more slippery characters. And for the sellers, well, if a buyer decides to charge back on their NFT splurge, you might just be left reading the fine print and wondering where the love went. Now, this isn't PayPal's first dance with digital assets. They've been courting cryptocurrencies and even flirted with their own NFT systems, complete with perks like royalties. But when it comes to putting a ring on it, PayPal is now saying, I think we should see other people, at least where buyers and sellers' protections are involved. So as the digital world turns, PayPal's policy update might have some users swiping left, looking for a little more commitment in the risky business of NFTs. Moving on, it seems like Trust Wallet has found themselves in the middle of a tech-based thriller. Only this time, it's not Netflix, it's real life. The crypto wallet provider is waving a big red flag, urging Apple users to turn off iMessage quicker than you can say 0-day exploit. Why?
Tell me why.
Apparently, there's a cyber boogeyman lurking in the dark web, ready to pounce on your iPhone and make off with your digital gold. Aowen Chen, CEO of Trust Wallet, not only sounded the alarm, but also threw in a screenshot of this high-stakes cyber mischief being hawked for a cool $2 million. That's right. For the price of a nice Manhattan loft, you too can apparently take control of someone's iPhone. Pretty scary, huh? But not for us. The claim has stirred up more drama than a season finale cliffhanger. Some folks are buying it, digging into their settings to disable iMessage as we speak. What about others? Well, they're not so convinced. Bo, a pseudonymous blockchain researcher, basically called it a screenshot of a ghost story. You don't have evidence of an iOS exploit. You have a screenshot of a guy claiming to have an exploit, he quipped. Ouch. Talk about a reality check. But hey, according to Trust Wallet, better safe than sorry, right? While the debate rages on with over 1 million views on X and comments flying faster than a group chat on a Friday night, one thing's for sure. Whether it's a real threat or just a clever way to stir the pot, the crypto community is on high alert. And maybe, just maybe, that's the point. All right, let's take a brief detour from our usual crypto talk to peek behind the curtain of the Undeads world. Because what's a little apocalypse without some backstage insights? Undeads. For those new to this rodeo, it isn't just another zombie game. It's where blockchain meets brain eaters, blending a survival horror with a play-to-earn mechanics that are as strategic as they are thrilling. Since the end of March, our team has been as busy as a necromancer on Halloween. We've been tweaking and tuning, ensuring that every non-playable character isn't just wandering aimlessly, because even zombies and PCs deserve a purpose. We've dressed up our game items with nifty descriptions so you'll know exactly what you're looting and why you desperately need it. On the technical side, we've been wiring the guts of our game, implementing data transfers smoother than a vampire's charm, and our loot containers now look so good you'll want to take them home. Our tech art wizards have laid down roads and set up scenes that would make anyone feel right at home. And because we're all about action, we've been arming you with an arsenal that would make an armory jealous. Animations for axes, pistols, and blades have been synced up to ensure your slicing and dicing is as fluid as a ballet dancer with a vendetta. And keep your helmets on and your wits about you. Undeads isn't just surviving, it's thriving, and you're on the front lines of the coolest apocalypse ever coded. And if you're eager to stay tuned into what's cooking in the Undeads universe, be sure to check out our Medium page for the latest updates. Okay, But before we let you go, we still have a few tales we want to share with you. In a maneuver that's part self-rescue, part strategic brilliance, Binance US has pulled a regulatory rabbit out of its hat by snagging Martin Grant, a former New York Fed compliance chief, for its board. Yes, the crypto exchange, known for its regulatory scuffles, is now betting on a Fed veteran to chart a steadier course. Martin Grant, a name synonymous with compliance, from his days overseeing ethics at the New York Fed from 2005 to 2022, is stepping into the crypto chaos that Binance US has found itself enrolled in. This pivot comes just months after Changpeng Zhao, the former chair of Binance US and a high-profile face in the crypto scene, stepped down amidst a triangle with U.S. regulators, complete with a felony guilty plea. Norman Reed, interim CEO of Binance US, is practically beaming at the prospect of Grant's guidance. With the crypto industry teetering at a so-called inflection point, Reed's enthusiasm suggests he believes Grant's knack for navigation of complex regulations could be the lifeline Binance US needs to regain its footing in the regulatory dance. It's as if Binance, post-regulatory mishaps, is dressing up for a more respectable part in a global financial theater. As Binance US gears up with Grant's old guard regulatory know-how, it's clear they're hoping to mend fences and smooth out the wrinkles with the US regulators. In the high-stakes world of crypto, it's a strategic blend of old school meets new chaos, and the community watches intrigued by this attempt to balance the scale of innovation with the weights of compliance. Will it be enough to steady the ship? Well, only time will tell, but for now, it's a plot twist worth watching. And finally, in the latest episode of As the Crypto World Turns, OKX, the world's second largest crypto exchange by volume, finds itself in a bit of a cast shakeup. Tim Bayan, the former US CEO turned global government relations guru, and Wei Lan, the mastermind behind the product and trading desk, have both decided to bounce. Tim Bayan wasn't just playing house in the role of CEO at OKCoin from 2018 to 2020. He later took on the hefty task of smoothing things over between OKX and various global governments, a job that's part diplomat and part tightrope walker. Meanwhile, Wei Lan has been the one making sure that all trades on OKX were as finely tuned as a symphony orchestra. Overseeing the activity of the trading desk. Their departure comes amid OKX's big brand consolidation move. Think of it as trying to get all of its ducks, or perhaps Bitcoins, in a row under one global banner instead of operating a separate US sideshow. This strategy shift also saw Patrick Dunnigan, the global compliance chief, make his own discreet exit earlier this year after a brief 6-month cameo. So as Bayan and Lan take their final bows at OKX, the crypto world watches eagerly to see who is going to step into these new vacant roles. Will the new faces be able to keep the exchange running as smoothly as before? Or will there be a plot twist that we didn't see coming? Well, only time will tell, but for now, it's a to be continued for OKX. And that wraps up our tour of today's crypto news. If you found a nugget or two of wisdom in this chaos, why not hit that like button? It's a small gesture that speaks volumes. And if you haven't already, consider subscribing, not just for the updates, but to join a community that dares to dive deep into the complexities of blockchain and the wilds of undeads. Thanks for spending this slice of your day with us. We're all just navigating in this vast digital sea, learning and adapting as we go. So keep those wits sharp and your strategies sharper. But remember, the truest wisdom is knowing there's always more to learn. Keep your curiosity alive, your crypto secure, and your outlook humble. We'll be right here, sorting through the signals and noise, ready to guide you through whatever comes next. Until next time.